Picture this, it's 2008. The entire financial system is on the verge of collapse. Lehman Brothers has just imploded. The Fed's emergency line is perpetually busy. But hey, relax people, my bonus is guaranteed. Sir, millions are losing their homes. Yes, and my watch is still shiny. Priorities. Then, breaking news, $700 billion will be used to rescue financial institutions. Wait a minute. They're the ones who messed up, and now we have to pay for their mistakes. Yep, $700 billion. So, I guess this means no Disneyland this year, buddy. Son, this year's vacation is just having electricity. Trust in banks gone. Faith in governments burning faster than a hedge fund's balance sheet. The world was furious, and it was ripe for a rebellion. Then, on Halloween 2008, an anonymous figure named Satoshi Nakamoto dropped a bomb, disguised as a PDF file. The idea was simple but revolutionary. What if we had money, but no banks? A currency no government could inflate, with no middlemen. Just pure math, code, and a public ledger that everyone could check, but no one could fake. On January 3, 2009, the first Bitcoin block, now known as the Genesis block, was mined. Hidden inside was a subtle little message for Wall Street. This wasn't just about new technology, this was a rebellion. Bitcoin was born not from greed, but from pure frustration. So, what is this crypto stuff anyway? It's money that can't be printed by rich guys in suits. So, magic internet money. Magic, with a whole lot of math. For months, Bitcoin was just a nerdy little experiment. Then, one guy decided to trade them for something real. He posted online, "I'll pay 10,000 BTC for 2 pizzas. Any takers?" At the time, it was just a novelty. But you know what those 2 pizzas are worth today? Over $600 million. The lesson here. History's biggest financial revolution started with a takeout order. This wasn't just new money, it was a declaration of war on the old system. And the battle was just getting started. So how does it all work? Imagine a notebook. But not just any notebook. This one is copied across thousands of computers all over the world. If you try to tear out a page, 10,000 other copies will immediately call you a liar. That's the blockchain. Try to change a single transaction, invalid. The network rejects it. What if you change the last block? Still wrong. The magic is that to fake a single transaction, you'd have to rewrite every copy of the ledger at the exact same time. Good luck with that. So, who updates this unhackable ledger? Meet the miners. They're in a global math race, using powerful computers to solve complex puzzles. The winner gets to add the next block of transactions to the chain and earns a reward in Bitcoin. This is called proof of work. It's a system that burns a lot of electricity, but it's what keeps the entire network secure. And unlike dollars, where a central bank can just decide to print more, Bitcoin's supply is completely predictable. The rewards that miners earn get cut in half every 4 years. In 2009, it was 50 Bitcoin per block. By 2012, it was 25. In 2016, 12.5, and so on, until the last Bitcoin is mined around the year 2140. This fixed supply completely changes how people think about money. Instead of rushing to spend your cash before it loses value, Bitcoin encourages you to save, to be patient, to think long-term. Governments often print more money to solve economic problems. The result? Everyone's savings become worth less. This is inflation. Bitcoin is the opposite. There's no central bank, no money printer, just a hard cap of 21 million coins, ever. While the US printed over 40% of all its dollars in existence between 2020 and 2022, Bitcoin's inflation rate actually fell. In a world of easy money, Bitcoin is hard money. That's why people are calling it digital gold. Gold is scarce, durable, and has been trusted for thousands of years. Bitcoin shares those qualities, but it's also instantly portable and programmable. I can carry $10 million in my head just by remembering 12 simple words. You can't do that with gold bars. And verifying Bitcoin. We can do it in an instant just by checking the blockchain. This potential is why the big names are diving in. Michael Saylor borrowed billions to buy it, calling it digital property. Cathie Wood predicts that if institutions allocate just a tiny fraction of their portfolios, Bitcoin's price could hit $1 million. Even entire countries are experimenting. El Salvador made Bitcoin legal tender in 2021, allowing its citizens to skip the 10 to 20% fees on international money transfers. They even launched a volcano-powered Bitcoin mining city. Yes, you heard that right, volcano-powered. In places like Nigeria, Argentina, and Ukraine, Bitcoin has become a lifeline. It's a tool to protect savings from hyperinflation, receive global payments, and escape financial censorship. Today, over 300 million people use crypto, and institutions are finally catching on. Fidelity, BlackRock, and Goldman Sachs are all offering Bitcoin services. But for every believer, there's a skeptic. Some of the world's most successful investors have been very vocal in their criticism. They'll say, "You see this burger? It has substance. Bitcoin doesn't produce anything." They argue it's just speculation, like trading turds. Jamie Dimon, the CEO of Morgan Chase, famously called it a fraud back in 2017. Fast forward to today, and his bank is offering crypto services. His opinion? He still thinks it's a pet rock. Are they wrong? Not entirely. They're judging Bitcoin by the standards of the old world: cash flow, dividends, and regulatory clarity. But Bitcoin isn't trying to be a company. It's trying to be a new kind of asset, like gold, but for the digital age. However, criticism isn't the only threat. What if Bitcoin is destroyed not by a quote, but by a crisis? What about its mysterious creator, Satoshi Nakamoto? He lit the fuse and then vanished, like the Batman of money. He's thought to hold around 1 million Bitcoins. What if he comes back and sells them all? The market would crash, right? Short answer: no. Even if Satoshi returned, he couldn't change the rules alone. Bitcoin's code is open source, and any changes require global consensus from thousands of miners, developers, and node operators. The system is designed to be bigger than any single person, even its creator. Then there's the futuristic scare: quantum computing. One day, these superpowered machines might be able to crack modern cryptography. But today, they're still struggling to solve a Sudoku puzzle without overheating. And Bitcoin developers are already working on quantum-resistant upgrades, just in case. What about governments? Can't they just shut it down? Well, they've tried. China banned mining multiple times. But Bitcoin isn't a company with a headquarters you can raid. It's a global, decentralized network. When China cracked down, miners just packed up their gear and moved to other countries. The network didn't even flinch. And finally, could a better, faster, shinier crypto come along and dethrone it? There are thousands of other coins. Ethereum is more flexible, Solana is faster, and meme coins are, well, they exist. But Bitcoin isn't trying to be the trendiest tech. It's built to endure. It's slow on purpose. It's simple on purpose. It's secure on purpose. Just like gold, it's designed to be government-proof, inflation-proof, and time-proof. So, what is Bitcoin's real superpower? It's not perfection. It's survival. It has faced test after test, threat after threat, and it's still here, stronger than ever. Maybe that's the whole point. Thanks for watching. Don't forget to like, subscribe, and hit that bell for more.